Okay, so you've brought us some really interesting resources this time, all looking ahead to the economic landscape for 2025. Seems like the big themes are tariffs, inflation sticking around, and, well, how jobs might be changing.
Absolutely. And listeners sent in quite a few things, including one source that really caught my eye. It was actually a podcast script called The 2025 Money Survival Guide.
Ah, okay. A survival guide. Sounds intense.
It does, but it's quite practical. It lays out these anticipated challenges, but crucially, it offers some, concrete ideas on how people might navigate them.
Right, so our mission here, like always, is to dive into these materials, especially that survival guide, and pull out the most vital insights, the actionable stuff. We want to give everyone listening a clear picture of what might be coming and some real steps you can take to, well, not just survive 2025 financially, but maybe even get ahead.
Exactly, a shortcut to the key strategies.
So let's talk about this economic battlefield, as the outline puts it. What are the main things the sources are warning about for next year?
Well, the sources, particularly that Money Survival Guide, point to a few major headwinds. It's like the battle lines are being drawn for next year's economy already.
Okay, lay out these battle lines for us. What are we looking at?
First up, something the guide calls Tariff Wars 2.0 doesn't sound good.
No, it doesn't. What does that mean, practically?
It suggests we're looking at ongoing, maybe even escalating trade tensions. Think China, think the EU, and the direct impact. Well, they're projecting price hikes, maybe 10 to 15%, on things like electronics, cars, furniture, stuff people buy all the time.
Wow, 10–15% on electronics. That hurts. That new gadget suddenly looks a lot pricier.
It really does. That's a direct hit to your wallet.
Okay, what's the next challenge on the horizon?
The second one is what they're terming sticky inflation. We've all been feeling it.
Yeah, tell me about it.
While maybe the rate of increase has slowed in some areas, the message is that it's proving stubborn, especially for necessities. The guide specifically mentioned groceries still being up, like 4% year over year.
4% on groceries still.
Ugh. And rent costs. They're highlighting that as a continuing struggle for a lot of people. It doesn't feel temporary anymore.
Right, it feels like this higher cost baseline is just settling in. Okay, so tariffs, sticky inflation. What was the third big one?
The third one is the AI job shakeup. This is about artificial intelligence and its impact on the job market, which seems to be accelerating.
Ah, yes. We hear a lot about this. What are the specifics they're pointing to?
The Money Survival Guide actually cited a statistic predicting that about 14% of entry-level jobs could be automated.
14%.
Yeah.
That's a significant chunk, especially for people starting out.
It really is. It's not some distant future thing. It's presented as a near-term shift. It implies, not just job losses, but also a change in the kinds of skills needed, maybe more roles working with AI.
So that really underlines the idea that maybe relying on just one income source isn't enough anymore.
Exactly. And one of the first bits of advice from the guide touches on that directly. It suggests side hustles might become, well, less of a nice to have and more fundamental for financial stability for a lot of folks.
That makes a lot of sense given those numbers. Okay, so facing these potential headwinds, tariffs, inflation, AI job shifts, what's the initial game plan the sources offer?
The expert in the Money Survival Guide gave a couple of starting points. First, thinking about localizing spending.
Localizing spending, meaning?
Basically, trying to buy more goods made domestically, like here in the U.S. The idea is you might sidestep some of those import tariffs that way.
Okay, buy American to potentially avoid the tariff hit. What else?
The second piece was about timing big purchases. If you're planning to buy something significant that's likely imported, think a car, maybe some electronics, the advice was to consider doing it sooner rather than later.
Trying to lock in the price before potential tariffs kick in and drive it up.
Precisely. Now, you asked a good question earlier. How do you know if something's U.S. made? It's not always obvious.
Right, exactly.
Yeah, there's no single magic label. But you can look for explicit Made in USA claims on packaging. Sometimes researching brands known for domestic manufacturing helps. There are also some organizations that track this stuff, which might give some clues about which industries have a strong U.S. base.
Okay, so it requires a bit more consumer awareness, a bit more homework.
Definitely. And on the AI job front, the initial advice was pretty straightforward.
Which was?
Upskilling, proactively learning new things. The guide specifically mentioned free resources, things like Coursera or those Google certificate programs, using these to kind of future-proof your career.
Makes sense. Adapt before you have to. Thinking about skills that AI can't easily replicate, I guess.
Yeah.
Creativity, complex problem solving.
Exactly. Focusing on those human strengths. Doing a bit of research on what's actually in demand in your field is probably smart too.
Okay, so we've got the battlefield mapped out. Now let's talk defense. Budgeting is always key, but maybe even more so now. The guide had a specific framework.
Yes, they called it the Survival 552520. Tailored, they suggest, for these potentially tougher times.
Survival 552520. All right, break it down. What's the 55?
55% of your income goes to needs. This is your absolute essentials. Rent or mortgage, utilities, groceries, transportation to work, necessary insurance, medications, the must-haves.
Okay, the non-negotiables.
Then the 25. 25% is for wants. And this is where the guide suggests a noticeable squeeze compared to, say, the traditional 50-30-20 rule. They're suggesting cutting back discretionary spending from maybe 30% down to 25%.
So less for dining out, entertainment, hobbies, that kind of thing.
Exactly. Non-essential shopping, subscriptions you don't need. It's tightening the belt on the fun money.
25% for wants. That feels tight. Is that realistic for most people? Does it risk burnout, making people just give up on the budget?
That's a really fair point. The guide frames it as potentially necessary given the economic outlook. But you're right, being too restrictive can backfire. The key is finding a sustainable way to live within that 25%, allowing for some enjoyment so you don't feel totally deprived and then, splurge later.
Right. Finding a balance within that tighter limit. Okay, that leaves 20%.
And that final 20% is earmarked for savings and debt.
Yeah.
Building your emergency fund, investing for retirement, aggressively paying down high-interest debt. This part is positioned as non-negotiable.
Yeah, that 20% feels critical, especially with uncertainty looming. So where do people usually leak money, according to the guide? Where does the budget break down?
They highlighted a few common culprits. First, subscription creep.
The silent budget killer.
Totally. All those streamings, they projected potential price hikes around 12%.
12%. Yeah, that definitely makes you reconsider upgrading, just cause.
For sure. Second category was used cars, specifically ones imported from the EU. The suggestion was tariffs could add maybe $2,000 to the price of those.
$2,000 extra on a used car. That's huge. That could really reshape that market.
It really could. And the third area they mentioned was sneakers.
Sneakers? Like Nikes and Adidas.
Yeah. Brands like that often have complex global supply chains, so they're likely to pass on increased costs from tariffs on components or finished goods.
Wow. Phones, cars, shoes. Pretty everyday items potentially getting more expensive. Did the guide offer any workarounds? Ways to maybe lessen the blow?
Yes, definitely. For tech, like phones, they suggested seriously considering refurbished options. Websites like backmarket.com were mentioned places that sell certified pre-owned tech. Often much cheaper, could offset the tariff impact.
Good tip. Refurbished can be great value. What about the used car situation if prices jump $2K?
The idea floated was if tariffs hit hard, maybe consider leasing instead of buying a used import. Lease payments are usually fixed, right? So that could shield you from unexpected price hikes affecting the car's value later on.
Interesting angle. Locking in your cost. And for things like shoes or maybe kids' clothes that they grow out of fast.
For those, the advice was more about proactive stocking up. If you know you'll need them, maybe buy that extra pair of sneakers you like or the next size up in kids' clothes now before potential price increases hit.
A bit of strategic stockpiling. Okay. Did they offer any general advice on just staying informed about when these tariffs might actually hit?
Yes, a really good pro tip. They recommended keeping an eye on the U.S. International Trade Commission website. That's usitc.gov.
Okay, usitc.gov.
Yeah. Apparently, price increases often show up at the retail level about 30 days after new tariff rules are officially announced. So monitoring that site could give you a little heads up.
That's incredibly useful. Forewarned is forearmed. Okay, let's pivot again. Debt. Always a big topic. The guide built on the debt avalanche method.
That's right. It reinforced the basic idea. Tackle the debt with the highest APR, the highest interest rate first. Pay minimums on everything else, throw all extra money at that highest rate debt. Saves the most interest over time.
Standard avalanche.
Yeah.
But they added a step for 2025.
Yes, a crucial first step. They recommended proactively calling your credit card companies, your loan providers, before you even start the avalanche.
Calling them to do what?
To try and negotiate a lower interest rate. The advice was to mention competitor offers. If you have any, use that as leverage. Even knocking a point or two off a high APR can save you real money.
So try to lower the cost of the debt first, then attack it with the avalanche method focused on the highest remaining APR. Smart.
Exactly. Make your repayment dollars work even harder from the get-go.
Makes perfect sense. Now, the guide also had a warning, right, about debt relief services.
A very important one. They highlighted a big jump, like 62% in the last year, in what they called debt relief scams.
Oof. Yeah, people are vulnerable when they're struggling with debt.
Totally. These outfits make big promises, sound too good to be true, and can leave people way worse off. The strong advice was to only seek help from reputable nonprofits. They specifically recommended the National Foundation for Credit Counseling, nfcc.org.
nfcc.org. Got it. Crucial warning there. Did they share any success stories to show this stuff actually works?
They did. They mentioned a listener, Sarah from Ohio, who apparently paid off $22,000 in debt in just 14 months.
Wow. How'd she do it?
Combination strategy. She used the debt avalanche method rigorously, and she picked up delivery gigs for extra income, throwing all that extra cash at the debt.
That's fantastic. Really shows combining the strategy with boosting income makes a huge difference.
It really does. A great motivator.
Okay, speaking of extra income, the side hustle Thunderdome, as the guide dramatically called it. What were the hot opportunities they saw for 2025?
They listed a few promising ones. Top of the list was AI training.
AI training. What does that involve?
Things like labeling data for chatbots, helping improve AI systems, and the potential pay. They cited $20 to $50 an hour.
Whoa, $20 to $50 an hour. That's surprisingly good for side work and taps right into that whole AI trend.
Right. Seems like a potentially solid opportunity. Another one they mentioned was kind of cute. Granny Uber.
Granny Uber. Okay, explain.
Basically, driving services specifically for seniors, helping them get to appointments, run errands, catering to a real need in a growing demographic.
That's actually a really thoughtful idea. Nice. What was the third one? It was a bit different, wasn't it?
It was investing in vending machines.
Vending machines, really?
Yeah. They suggested it could generate maybe $300 to $800 a month in profit, depending on location and what you sell. More passive once it's set up, aside from stocking and maintenance.
Huh.
Yeah.
Vending machines. Never would have thought of that. Okay, but the guide also stressed starting small, right? Not getting overwhelmed.
Absolutely. Big emphasis on that. They pointed out that even just, say, 5 hours a week could bring in an extra $200 to $500 a month.
That makes it feel much more manageable.
Totally. And they directly linked that extra cash to either paying down debt faster or building up that emergency fund quicker.
Right. Connects everything together. Did they have any other slightly unusual ideas? I think there was one more.
Yeah, one more slightly unconventional one. Renting out unused space, like your garage or a spare room or even just a shed for storage.
Renting out storage space.
Mm-hmm. They mentioned platforms like Neighbor.com that connect people who need storage with people who have extra space. They even gave an example of someone making about $175 a month just renting out their garage.
Wow, monetizing empty space. Clever.
Oh.
Okay, we have covered a ton of ground here. The potential challenges for 2025, budgeting tactics, tariff workarounds, debt strategies, side hustles. Let's try and boil it down. What are the absolute key takeaways from that money survival guide?
Okay, yeah, let's recap the core actions. 1, budget, using that tighter 5-2-5-20 rule, getting real about needs versus wants.
Right.
2, be strategic about tariffs. Think buying local, considering refurbished, or maybe buying some things early if you know you'll need them.
Got it.
3, attack debt hard. Use that avalanche method, but first try negotiating lower rates and boost your attack power with income from side hustles.
Okay. Negotiate, then avalanche plus side hustle cash.
Exactly. And 4, choose side hustles smartly. Look at potentially higher paying, growing areas like that AI training example, not just the most obvious gigs.
Excellent summary. Very actionable.
Yeah.
And didn't the guide also make a prediction about interest rates later in 2025?
It did. They speculated about a possible Federal Reserve rate cut maybe in Q3 of 2025.
Okay, a potential rate cut and the implication.
If that happens, they suggested it could be a really good time for homeowners to look into refinancing their mortgages, potentially lock in a lower rate, lower those monthly payments.
Good forward-looking tip for homeowners there. Keep an eye on rates around Q3 next year.
Definitely worth watching.
Now, the guide finished with a call to action, asking listeners for their best money hacks for 2025. Let's do the same. Listener, what's your top tip? Share it with us. Maybe we can feature some favorites down the road.
Yeah, we'd love to hear them. And, thinking about all this, the potential changes, the strategies, it really just highlights how important it is to be proactive, to stay informed.
Absolutely. The landscape seems like it's definitely shifting.
It does. And those who prepare, adapt, and just stay aware are probably going to be the ones who navigate it best. So maybe the final thought for everyone listening is, what's one step, just one thing, you're going to do now based on all this to get yourself ready for whatever 2025 throws our way?